Hey there, it's Gretchen Coley with the Coley Group at Tate, and I've got my trusted lending partner, Jean Hedges, with me. Jean is the branch manager of Southern Trust, and she runs the Hedges team. Phenomenal team to work with. So thank you so much, Jean.
Thank you for having me.
Being with us today. Today we are talking about first-time home buyers. So if you are out there and are thinking at any point in the future, whether it's 6 months, a year, 2 years down the road, you think you're going to be looking for a home, stay with us because we're going to cover some incredible information from you. We're in historic times with interest rates right now. Tell us a little bit about how the Fed rate cuts have affected interest rates on mortgages and what people can be expecting.
Well, first of all, the Fed rate cuts does not directly affect mortgages. However, the same economic indicators that prompt the Fed to reduce rates motivate the mortgage market as well. So we are going to be following right behind them. We have never seen these kinds of rates for the time frame we're seeing them right now. It's unbelievable. It's an opportunity that nobody should be missing out on.
So right now, we're in the low fours, the threes at the filming of this video. Obviously depending on a lot of factors, but I heard a stat a couple of weeks ago that said that 66% of first-time home buyers right now are millennials. And they're living in apartments that have some amenities, like a doggy spa or a car wash station, but they're paying really high rent. What are you seeing from the people that you're working with that are coming in looking at buying a home versus what they're paying in rent?
Well, I can say from my own experience, when I first met my husband, when we first got married, he was adamant we buy a house. I was not in lending at the time, and I was managing property and got free rent, and I was like, oh my God, I don't want to give up on free rent. Well, fast forward 30 years, most of our wealth is tied up in the home because we own it outright, and over time we've been able to literally just pay it off.
Mm-hmm. And you've had that appreciation.
And the appreciation has quadrupled by a long shot. So if we could still be living rent-free in a little rinky-dinky apartment, but now I have a beautiful home and I have no mortgage. So it's a beautiful thing. Even though I do, mortgage lending is what I do, I want to see my people be debt-free as much as possible and living the good life.
Absolutely. What would you say to the person who is sitting on the fence? They're in that luxury apartment. They're thinking about moving. What would you say to them?
Well, if you turn the clock back just even 10 years, rents in our market were probably 800, maybe 1,000 got you into a luxury apartment. Now I'm seeing those luxury apartments at 2,000, 2,500.
Yeah.
You can get a beautiful home and it will never go up. So many renters now wish they had bought back then because your payment's frozen.
That's a great point, and I don't know that I communicate that all the time. That freezing of your payment and your rent is forever increasing, and it tends to be too that people who rent move a lot, so you have that additional expense of moving every couple of years in there. So we are in a time where we're kind of in historic rate lows. We're also in a little bit of a bubble. We've got a minute to kind of slow down. And I'm getting questions from people asking about if they should refinance their credit card debt or if they should consolidate that credit card debt prior to buying a home.
That is something that's highly individual, and it really takes talking to a good trusted lender to know if it makes sense for you. If you've got strong credit and your credit cards are say in the 14-15% range and we can find a way to consolidate and get it down to 2 or 3%, that's going to make sense. But if your credit's a little lower, you may find that you're not going to get a better interest rate, and there really isn't a big advantage to it. So it's very personal. If you already own a home and you can put it into a refinance, it may make sense. With student loans, you really got to research the loans you have. If you're in a loan forgiveness program, consolidating and refinance might make you ineligible. So the important thing there is to definitely do your research.
So we're in a really unpredictable market right now. And you and I have been doing this for a long time. We see people do the craziest things. So what would you say to someone who might be thinking about the credit consolidation, the student loan consolidation? What would you say to those people?
Just don't react out of fear. Do the research. Talk to people such as Gretchen and myself to get some good, solid advice so that you're making the best possible decision over the long term. And it's very unique to each individual.
It is. And you know, sometimes we see people who will pay off a credit card entirely, or we'll try to space it out across things. And you and I have had many conversations where we talk about how sometimes that doesn't really matter. And you've got a great system for getting people answers on that.
Absolutely. We've got a program, it's called Credit Expert. So once we've run credit, if the goal is to maximize a credit score, we just run it through there and it will tell us to the penny how much to pay down. When people do it on their own, I can't even predict that. It's a guess. It's basically a guess. Yeah. And if you want to, we've seen people go from 620 to 780 just by being very careful and doing things correctly. And so that's what you want to get
and following that system. And I think the biggest thing that we want to hammer home is there is a system for everyone, but it is very individualized. And really partnering up with a trusted partner, whether it's real estate, mortgage, lending, you've got to have someone that can actually take a look at your situation and get you those answers, and it's always no obligation. Now that we are in this little tight bubble of time to think and space to think about things, people may think they're a year out, or you may think you're 5 years out. But what should you be doing right now to get your house in order so you can buy a house?
Well, talking to a knowledgeable lender is really number one when it comes to the financial piece. There are a lot of little things that can be easily manipulated, but you need that, sometimes you need a little bit of timeline to get it all pulled together. So the earlier you start with a lender, the better chance you have when you find that house. And you can just be driving by an open house one day, you're ready to pull that trigger and you have no fears. It's very stressful when you buy a house. So if the loan can be sort of all worked out, that's one piece of stress that's off your plate.
And I will tell you, thank you so much to Jean, because she takes this stress off of our plate all the time. We get our folks who are even just thinking, we get them in the system. We get them pre-approved. We have all of their documents in so that when that perfect house comes on the market, they're ready, because there are never any worse tears when you're trying to buy a house as when a house comes on the market and there's 3 or 4 offers and you're not prepared to put your best foot forward.
Absolutely.
Jean, thank you so much for your help. We have got contact information below for all of you. We've also got a webinar for first-time home buyers that will talk about some of the pitfalls that are in the way, that if you can go ahead and get those out of the way, will help you be in a better financial situation and in a better situation to buy a home. That link is below. We would love to talk to you. Please reach out to either one of us, and thank you so much for watching. Thank you, Jean, for coming.
Thank you.